Hey guys, welcome back to my channel. So has the thought of buying a house overwhelmed you because you don't know or don't understand all the fees that are involved with buying a house? So you don't want to get ripped off and you don't want to get screwed. Well, in this video, I'm gonna break everything down for you so you don't have to worry. So you can walk into your first home that you're buying or your next one and understand what are the fees that you're gonna be paying for and who pays for them. And if you watch until the end, I'm gonna share a secret with you on how you can get the seller to pay some of your closing costs. And if you haven't already done so, please subscribe to my channel and hit the like button if you find this video valuable. All right, so there's two things to keep in mind before you go into the home buying process to understand what all the closing costs are. So A, there's gonna be closing costs for the real estate part of the transaction, and there's gonna be closing costs for the loan that you're getting, okay? So there's gonna be two different closing costs. In addition to that, closing costs differ by escrow company. So every escrow company charges a little bit of a different fee. So it's gonna be a little bit higher or lower than what I explained here, but not much of a difference. And the other difference is gonna be depending on the size of the transaction. Okay, so the fees for a $300,000 condo are gonna be different than a $10 million house. Okay, so that's another thing to keep in mind. The higher you go in price range, the higher the fees are gonna be. All right, the first thing we're gonna dive into are the real estate closing costs. Okay, so on the real estate side of the transaction, so we'll talk about the loan, the cost associated with the loan later. Okay, so the real estate part of the transaction, there's certain closing costs. So the first thing to mention is, as a buyer, you don't pay your realtor's commission. Okay, so I made a previous video in the past on like if you should use a realtor, if you shouldn't. If you're a buyer, it's a no-brainer. You're not paying your realtor. The seller is gonna pay your agent's commission. So get a trusted realtor on your side, like us, who can help you do this transaction because it doesn't cost you anything. All right, guys, so let's just dive right in and see what you're gonna be paying as the buyer in a real estate transaction. So let's just go down the list. Archiving fee. So an archiving fee is a fee you pay to your escrow and title company. They're gonna save your documents forever. So if you ever, 5 years down the road, 10 years down the road, something is in dispute, you need a document, this is what this pays for. So they charge a fee to keep your documents for a very, very long time. So number two, lender's title policy. So every lender is going to require that you get title insurance. So what that will do is, for example, you buy a house, 5 years down the road, someone shows up and says, hey, this is my house, or I have a lien on this property and I want to get paid, or some kind of dispute comes up, or there's a claim to the property down the road. This title policy is going to protect the lender in a situation like this. So you'll be required to get a title policy for yourself as well, but this is basically insurance that if someone shows up years down the road and lays claim to this property, this protects the lender and it will protect you as well. So number three, loan tie-in fee. So the escrow company charges this fee of $450. And the reason they charge that fee is because there's several loans that are tied to the transaction. Okay, so for example, the seller, the person selling the house, probably has a loan. Okay, and then you as the buyer, you're gonna be getting a new loan. Okay, so basically the escrow company has to get the money from the buyer, from you, and then they have to pay off the old loan, right? So when there's multiple loans in the transaction, there's an extra loan tie-in fee. In this case, $450. Number four, messenger fee, $25. So this is basically a person who's going to pick documents up from FedEx, deliver them to title so that you can close on your home on time. Okay, so this pays for a person to pick up, drop off documents in a timely manner so that you can close on time and get your keys on time. So that's $25. Number five, overnight handling / messenger. That's $75. That's gonna pay for any overnight kind of after hours, document delivery, kind of like the messenger fee, but a more, a more advanced kind of fee, because it's going to deal with someone having to do this job after hours, which costs more. So that's 75 bucks. Notary fee, 200 bucks. So when you're signing your loan documents, you're going to have a notary. Sometimes a notary will travel to you and meet you at a Starbucks or at your house, your current house. If you're a buyer and you're currently renting, they'll, meet you at your current residence and sign your loan documents there. That's 200 bucks. So that sometimes can be waived if the title escrow company has their own notary and you go into their office to sign the loan. Sometimes that notary fee will be waived, or can be reduced because they're not traveling to you, you're going to them. Okay, so title processing fee number 7, that's 150 bucks. Again, title processing the transaction, they need to make a little bit of money, so that'll go to title. Number 8, title recording service fee, that's 20 bucks. So that's a fee that's paid to the county to record the sale documents. Okay, so that's not something that title or escrow keeps, it's actually paid to the county. So number 9, settlement or closing fee. That is the escrow company's fee. That's the main fee that they're getting paid. That's kind of like their commission. So they're gonna make $14.85 bucks on this transaction. So number 10, sub escrow fee. I hear a lot of people like, what the hell is a sub escrow fee? It sounds like a scam. It's not a scam. It's just basically they charge a sub escrow fee if there's more than one escrow company involved, and they have to basically work with another escrow company. Money has to be wired back and forth because there's multiple escrow companies working on the transaction. So in order to kind of accommodate, send money back and forth, there's fees, wire fees, things like that's what that pays for. The last fee, number 11, closing wire fee for the closing agent. So again, this is a fee because they're going to wire the money to the seller, and basically wiring money costs money. So when you go to the bank and you do a wire, there are certain fees. So this fee covers the cost of doing a wire. Okay, so all of these fees are paid to the escrow and title company to cover certain costs and to get them paid. So this is the gist of what you're going to pay on the real estate side of the transaction when you're buying a house. So do all of these fees make sense? If not, if something doesn't sound right, doesn't feel right, please leave a comment and let me know if any of these fees don't make sense. I'll be happy to clarify. So we talked about some of the costs that are associated on the real estate side of the transaction. So now let's jump into see what kind of costs you're going to be looking at or you're going to be facing for the loan. So here we go on the loan side of the transaction. So the biggest fee that you're going to see, the first fee you're going to see, is origination fee of $3,627. So that's optional. Okay, that's an optional fee that you can pay. So what I mean by that is every interest rate has an associated cost. Okay, for example, you may qualify for a 4% interest rate. But Roger, what if I want a 3.5% interest rate? I want a lower rate. Can I get a lower rate? So the short answer is yes, you can. You can pay an upfront fee, a one-time fee of, for example, $3,627, and you can get a lower interest rate. Okay, so you can choose a 3.5% interest rate versus the 4. The 4 doesn't cost anything, but a 3.5% rate will cost you $3,627. So why would I do that? Okay, it doesn't make sense. It's kind of a big fee. Well, the difference in the rate might save you $100 or $200. Okay, so if that's the case, if you do the math, if I'm saving $100 in 3 years or 36 months, I'll make my origination fee back. So it makes sense to pay an origination fee to get a lower rate if you plan on keeping this loan for an extended period of time. If you're like, hey, I'm not gonna refi in 5 years, or 10 years, or I'm not gonna touch this loan ever, it makes sense to pay an origination fee because you lock in a lower rate. Okay, so the next one is an underwriting fee. So the bank charges an underwriting fee, the lender, to basically process all your paperwork, your taxes, your income paperwork, and all that. They're gonna charge a one-time fee of $1,000, and that's pretty standard across the board. Okay, so the next fee is an appraisal. So you're gonna have to pay to get an appraisal done. That's usually between $500 and $600 depending on where you live. So the fee we talked about in the last section, the real estate part, the lender's title policy, that probably should be here. For some reason it's not, but that is a fee that maybe is more closely associated with the loan because the lender is requiring that you get title insurance, so that might belong here, but anyway. So appraisal fee. So the next 4 fees that you see there, $10, $6, $50, $25, these are all small fees paid to the county. County charges fees to basically determine if you're in a flood zone and you have little, coverage for a flood, life of loan coverage. So these are little fees that are associated with getting a loan because basically there are certain agencies that keep track of, is this house in a flood zone? Is this house in an earthquake zone? Things like that, need to be paid for. And through these transactions, these fees are paid by the buyers. Again, they're small fees, but it's not extra fees that are going to the bank or anything like that. They're actually paying for little fees tied to your county, to your city, that have to do with flood zones and etc. Okay, so we covered some of the fees associated with the real estate side of the transaction, some of the fees associated with the loan. Now here are some other fees that you may come across when you're buying your first home. Okay, so let's look at this chart here. So basically we have recording fee $225. That's another fee to record your transaction with the county. Okay, so that's what that's for. The next 2 things under section F, number 1 and number 3, are not actually fees, but let's dive into that real quick. So number 1, homeowner's insurance. So when you get a house, the bank typically wants you to pay 1 year of homeowner's insurance up front. So it's homeowner's insurance, not an extra fee, but it's something you would have to get anyway, but they just put it here to break down everything that goes along with the transaction. So number 3, prepaid interest. So typically when you buy a house, you get to skip a mortgage payment. So basically you don't start your mortgage payment right away. So if you close on your house on, let's say January 15th, your first payment wouldn't be February 1st, it would be March 1st. So basically if you close your loan, let's take this for example. So we closed on the 25th. So it says interest from the 25th to the 1st is $60 per day, which comes out to $422. So think of that as like a partial mortgage payment because you didn't close exactly on, a certain date. You didn't close exactly on the 1st. The bank's gonna charge you interest because the transaction's done, the clock on the interest starts right away. So that's interest from the date you close to the 1st of the following month. Going down a little bit more, we can see the $1,014 owner's title insurance policy. So just like the lender requires you to get title insurance, it's highly advisable that you get the same title insurance policy for yourself. Again, if someone shows up years down the road and they say, hey, this is my property, or hey, I have a lien on this property, title insurance will protect you in that situation and tell that person to F off, or if something were to happen, you're insured, you're covered, you don't have to worry. Okay, so now that you've stuck with me to the end, which I really appreciate, I'm gonna tell you how you can get some of these fees paid for by the seller, okay? So, number 1, that origination fee that we looked at earlier of $3,600, that's totally optional. Okay, you don't have to pay thousands of dollars to get a certain interest rate. So you can save money if you're tight on money and your closing costs, and you don't have to pay an extra fee to get a lower interest rate. Just go with the par rate and you can avoid that fee there. The second thing that you should be doing, I do this for all of my clients, so when you're putting together a contract to buy a house, there's a box that says who pays for what fees. Typically, you split the escrow fees 50-50. I pay my fees, you pay your fees. As the buyer, I'll pay for my fees, you pay for your fees. But there's another box that says title insurance, who's paying for that? So always make sure your realtor marks that the seller is gonna pay for your lender's title insurance, okay? So that's $1,400, like we talked about earlier, that you can save. So make sure your seller is paying for the lender's title insurance policy. So the $3,600 for the rate, $1,400 for the lender's title insurance policy, that's about $5,000 you can save right there. Okay, how else can you save some money and get the seller to pay for some of your closing costs? So I'll tell you, when you're buying a house, you're gonna go into escrow and you're gonna do inspections, right? Almost every house is gonna have some issues. If you have a good realtor, you're gonna be able to get some rebate, you're gonna get some reduction because something is wrong with the house. For example, a recent house that I sold, there was mold damage, there was electrical issues, so we got about $4,000 just to cover the mold, okay? So, you know, if you're wondering, how does this $4,000 get applied, or how do I get this money? The first thing you think of is it's reduced off the price. So if you are paying $600,000 for a house, you're now paying $596, okay? When you apply that $4,000, that way, it doesn't make a huge difference on the monthly payment. It doesn't have a huge difference on your closing costs that you're gonna have to pay out of pocket. Okay, so if your closing costs were $5,000, even though you're getting $4,000 in credit, if you apply that to the price of the house, you're still gonna pay $5,000 in closing costs. But you can apply anything that you get as a credit from the seller because there's something wrong with the house can be applied to your closing costs, okay? So if your closing costs come out to $5,000, that's, you know, separate from your down payment. You're still gonna have to, the down payment has to be 100% from you. So, but let's say you find something wrong with the house, $5,000 worth of damage, and the seller says, all right, I'm gonna credit you $5,000. You can apply those $5,000 to all of your closing costs. So that actually all the stuff we talked about earlier, you don't have to pay for. Okay, so that will reduce what you have to pay out of pocket when you buy a house. And you can basically, whatever repairs that needed to be made, maybe you could find, after you close, maybe you could find someone that will take care of the mold for $2,000, or whatever the repair might be. You can kind of do it at a later time if you're kind of short on closing on your house now and you're short on cash, you want to save a little bit of money here and there, you can get anything that's wrong with the house as far as repairs. If you get credit, apply that to your closing costs, and that lowers your out of pocket when you're buying a house. And then you just have to worry about your down payment, which I've talked about in other videos. Basically, you can buy a house with 3.5% or 5% down, and then your closing costs are paid for, you're in real good shape. So I know that might have been a lot of information, a lot of fees to cover. So if you need to watch the video over or save, you know, take a screenshot of the fees, please feel free to do so. If you have any questions, please leave a comment, leave a like. I really appreciate you guys. Thank you for watching and subscribing to my channel, and I'll see you guys next time.